We have with us, in order to talk more about this topic, we have with us Anusha Agarwal, a research analyst at Century Financial. Welcome with us, Anusha. The first question that we are to ask you, the luxury sector, this sector suffered a lot since the beginning of 2024. We're talking about giant companies, LVMH, Hugo Boss, Kering, Burberry. All of these luxury brands were the weakest when it comes to their performance among the European equities and stocks. The question is, especially for those who look at the value, these companies, are they attractive or no? We have to have more sufferings for the companies.
First of all, thank you for having me on the show. In regards to European luxury stocks, the big names that come into mind, like LVMH, Kering, and Hermes, we have seen to have fallen in share price value in 2024 YTD performance. So when it comes to LVMH, we saw a 14% decline. Kering saw 42% decline in share price, whereas Hermes was still in the green, but at a YTD performance appreciation of just 0.35%. So these are the luxury stock names in Europe. They have in the past run in parallel with US Mag 7 stocks, but the performance this year has been underwhelming. The main reason for why the performance has been underwhelming has been due to China's slow growth and deteriorating economy. The numbers support that. For example, in the last 2 weeks, the market saw two very important figures. One, China's GDP growth, which was 4.7%, coming in weaker than 5.1% expected by the analysts in the market. The second important number to look at is China's manufacturing PMI, which came in at 49.1, signaling a contraction in the economy. Manufacturing sector is very important for China since it accounts for 50% of the GDP. Why these numbers are important is because for stocks such as LVMH, Kering, and Hermes, a lot and a high percentage of their sales comes from the region in itself. So, to speak in terms of numbers, LVMH's sales percentage from Asia, excluding Japan, is about 26%. For Hermes, it goes up till 43%, and for Kering, about 35%. So that's a significant percentage of sales coming from that region, which has seen deterioration. In the near time, it is possible that we will not be seeing a reversal in this trend, since the main reason for China's deteriorating economy is its real estate sector. While right after the pandemic, we did see revenue growth numbers to be in double digits for companies like LVMH, which was propelled by Chinese consumers being relieved of the pandemic and going for purchases and spending, that number has slowed down now. So for the near-term outlook, we can say that the luxury stocks will be negatively affected by China's slowing growth.
Anusha, can we say that China really can control the demand today? We see that there's a strong demand coming from other countries, and specifically if we look at the other regions and the Middle East, for example, where we had an increase in the demand on the luxury stocks. So maybe we will have a change in the demand coming from other countries.
Right. In terms of the breakdown of sales coming from the top regions of the world for European luxury stocks, the countries' names that come to mind are, of course, USA, Europe, and China. Middle East would not contribute a significant percentage as of today. While China's drop is significant, I personally think that it cannot be covered up by increasing growth in regions like US and Europe. So China's demand and the effect of its slowing economy will have a significant impact on the luxury stocks going forward.
Thank you, Anusha Agrawal, research analyst at Century Financial, for being with us. It was a pleasure. Thank you, ma'am.
Thank you for having me. Thank you.